down 66% in 2022. Is Atlassian stock a buy for 2023? I'm going to answer that question in this video, so stay tuned. The first thing I'm going to look at is revenue growth quarterly year over year going back until 2016. And you can see excellent top line revenue growth for this company that helps individuals working in different regions in the world to work together online. And arguably, this is going to become even more important now that remote working is more popular. Workers are going to need to use Atlassian's online resources that helps make working together remotely more effective and efficient. In its most recent quarter, revenue grew by 31%. And revenue growth has decelerated over the years, and that's to be understood. No company can grow at a 50% growth rate for the long term. Eventually, that moderates and slows down. It's been no different for Atlassian. The next thing I want to look at is operating income quarterly going back the same duration. And what I want to see is, as revenue is growing, I want to see evidence in the economies in scale. I want to see expanding economies in scale, which I do not see for Atlassian. If we go back here, you see operating income is steadily trending downwards. That means as revenue is increasing, the company is just losing more money on the bottom line. I don't like to see that as an investor. You mean to tell me that as you're scaling, as you're increasing your sales, you're losing more money? It should be the other way around. As you're increasing your sales, you should be making progress in leveraging your fixed costs, things like your office rent, things like maybe if you're buying products or services, that you can buy it in bigger quantities and make use of purchasing power. All of those reasons usually causes companies to increase profitability, the good companies to increase profitability as revenue increases. That's not the case for Atlassian. And similarly, I want to check cash flow from operations to see if there's any evidence of economies in scale. And in cash flow from operations, Atlassian is showing some economies in scale here. If we go back to before 2016, you can see a steady upward trend. If we're looking at if we're ignoring the big spikes and just drawing a line towards the bottom end of this range, you could still see an upward trend in cash flow from operations, which is good news for Atlassian stock investors. But I want to see what's the difference here. Why is it losing money in operating income? Why is it no economies in scale there? But there is economies in scale in cash flow from operations. Usually when this is the case, the main culprit is stock-based compensation. And if there's stock-based compensation, the company is diluting shareholders. So I want to look to see if this is there's evidence in shareholder dilution. And I am seeing that for Atlassian. Going back to 2016, it had roughly 210 million shares outstanding. Fast forward to the most recent update, it has 255 million shares outstanding. So in about 6 years, it has added about 45 million shares outstanding to its base of 210 million. So let's say roughly 25% dilution over 6 years of time. Let's say roughly 4% per year. That's not too bad for a company that's growing as quickly as Atlassian is. Finally, I want to look at valuation, and since the company is not consistently profitable on the bottom line, I chose to use price to free cash flow going back to 2016. You can see the price to free cash flow of 39.55 is about the cheapest this stock has traded for all the way back to 2016. So relatively speaking, the stock is not expensive. However, if we're comparing on absolute terms, a price to free cash flow of 39.5 is not cheap. That's a moderate price to free cash flow compared to a lot of other companies in the S&P 500 or a lot of other tech stocks. It's more comparable to tech stocks. So to answer the question, is Atlassian stock a buy for 2023? I'm going to say no. I'm concerned about the lack of evidence in economies in scale and operating income, and I'm concerned with the lack of profits on the bottom line, having to use the price to free cash flow, and then the price to free cash flow not being cheap on an absolute turn. It's cheap in terms of its history, but not cheap on absolute levels. And then, of course, revenue growth was decelerating rapidly. So I would not want to pay this kind of premium valuation for Atlassian stock. I would wait for a pullback of the stock price or to see some evidence in operating income expansion before I was to recommend buying this stock. All right, so thank you for watching. That's all I've got for this video. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.